The market open on this Tuesday morning. We are looking at red across the board for the major U.S. stock averages, pulling back by at least 1%. And we are also looking at global bonds and the U.S. currency lower. Well, the first half of 2026 markets saw support from a seasonally strong January, with investors slowly putting money back into the market after cutting risk late last year. While looking ahead, the big themes to watch include a re-acceleration in cyclicals, as well as a more fragmented geopolitical backdrop and continued AI-driven productivity gains. Small caps do also stand out as a key opportunity, with biotech a notable bright spot. We'll be touching on defense as well as AI. Well, joining me here at the New York Stock Exchange is Matt Orton, Chief Market Strategist at Raymond James Investment Management. Good morning, Matt. Great to have you here.
Good morning. Thank you. It's great to be here.
Well, here we are coming back from a long holiday weekend, and we are looking at geopolitics as well as red for the major stock averages, as well as the U.S. currency and global bonds. So what do you make of how we're about to head into this week?
So obviously the red on the screen is not incredibly constructive this morning, but when you take a bigger step back, it's been a very, very good year for equities. Ever since April 8th, it's been almost a straight line up. So in the context of the gains we've had, seeing a pullback on heightened geopolitical risk, concerns around tariffs maybe flaring up again, that all makes sense. And so what I encourage investors to do right now is try and sift through a lot of the noise that exists out there and look at what actually will impact the long-term fundamental story. And if it doesn't change the constructive outlook for earnings going forward, it's something to maybe sit on the sidelines right now and be ready to redeploy capital opportunistically once the dust settles a little bit around everything that's going on around the world.
Yeah, and indeed there are so many headlines on a regular basis, so it's almost hard to keep up. But as you mentioned, we have to keep an eye on what's happening in the bigger picture. And when we're looking at the broader market, we know that there has been a rotation, and we've been seeing an advance in the Russell 2000. So do you think we've had a false start this year?
I don't think so. So we've been optimistic on small caps really since the end of the summertime. And if you look, small caps have actually been outperforming the S&P 500 since April 8th. They just had a really significant drawdown heading into Liberation Day. So when I look at the constructive economic backdrop, one that has stronger GDP growth, we're going to have a great tax refund season right now. We also have earnings finally coming back into the market for smaller companies. All of that provides longer term support for small cap equities, and they're massively under-owned in client portfolios. So if there's weakness in the small cap complex this week, I'd be looking to pick up exposure to small caps and make sure that I have a proper exposure in my asset allocation, because I do think this is a durable trend that can last throughout 2026.
Yeah, and I do also want to get your take on the sector. I understand that biotech has been a standout with M&A picking up, and even this morning we're seeing Rep Therapeutics, which is a biopharma, rally, and this does come on the heels of GSK agreeing to buy the company for around $2.2 billion. So what is your take on this space?
Yeah, Remy, just like you highlighted, there's a lot of M&A opportunities that are going to come to bear in 2026, and with a more supportive regulatory backdrop, that should help biotechnology start to outperform. Granted, there have been strong gains again late last year into early this year, but this has been an asset class within small caps that has underperformed for such a long period of time. There's a lot of room to run for this trade, especially when you think that larger cap pharmaceutical companies are all facing significant patent cliffs in the next 2 to 5 years. So there's going to be a lot of money spent. They have a lot of cash to deploy. Biotech is going to be a beneficiary.
Yeah, and another sector I want to get your take on is defense. So we know that defense has been in the headlines. So give us your take on where we stand right now.
So defense obviously has done well given all of the geopolitical conflict that we're having. But defense companies over the past few years have actually become higher quality assets in the market. They're generating increasing free cash flow. They have stronger backlogs, and this fracturing that we're seeing from a geopolitical perspective lends support longer term not only to U.S. defense companies, but global defense companies. So I've been looking for opportunities not only in U.S. defense companies that are more on the technology side, those integrating communications, robotics into what they're doing, but also in Europe and Asia, where everyone needs to start paying more and where there's a lot more investment taking place to make sure that countries have proper defense and they're not reliant on other countries around the world.
Yeah, and finally, before I let you go, earnings season has kicked off, and morning, we are paying attention to the AI names, of course, but as we move through this year, where do you think the real monetization will be showing up, and what subsectors within the AI trade are you paying attention to?
So last year my theme was AI 2.0, so it was moving beyond the hyperscalers into all of the tangential plays, data centers, physical infrastructure. All of those trades are a little bit more fully valued at this point, but what I'm looking for in 2026 are bottleneck beneficiaries. There's significant bottlenecks around power, there's bottlenecks around memory, around wafers, so semi-cap equipment companies is one area that I've been investing in increasing exposure to. We already heard from TSMC, very, very strong earnings, and that should benefit the semi-cap complex. So if we get good numbers from that group in the coming weeks, I think that trade has a lot of durability throughout the rest of the year.
Well, Matt, it was great having you on the show. Thank you so much for joining me in person today, and thank you so much for sharing all of your insights. My pleasure.